Good morning, everyone. Hope everyone out there is having a good day so far. We're going to have some fun today. We're going to talk about what's going on around the markets. We're going to focus on how I use Bookmap to analyze the order flow and what moves prices. Just getting everything all staged up on my end here. Hope everyone's had a good week so far. So a little bit about me. My name's Markets and Mayhem. I've been trading since 2005 and investing since 2006. And I use Bookmap to analyze the markets in shorter time frames. I found it to be an invaluable tool. So the focus of today's stream is to really discuss about how I'm using Bookmap and show you so that you can gain some benefit from it as well. So let's kick things off. First, with everyone's favorite slide, the risk disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So a little bit more about me. My real trading journey began in 2005. That's when I executed my first trades. I had a lot of fun, managing my own account. I had done some trades by proxy through my dad back in the 90s. Amazon and Yahoo had each one double and got out the next day because I didn't understand what was happening. Money could be made that easily. I felt like no one would work. So I took pause there and came back to the markets in 2005 with my own capital, my own account, and started learning how to trade stocks, options, then got into more to futures, Forex, and really learning about the plumbing of the system as I navigated through the great financial crisis. Because how could you not learn about the plumbing when it's sitting there breaking down before your very eyes on a day-by-day basis? It was a formative experience. It was a good one. I had some great trades. I had some terrible trades, but I learned invaluable knowledge about risk management, about the relationship between macro and momentum. And really that helped me to put together a system that's much more objective and much less driven by emotion. So from that evolved my approach, which is one that's systematic. It's driven by momentum, price action, options flows, volume profile, and of course the big picture. And I began working with Bookmap in early 2022 because I saw great value in the way their platform displays market data. If you haven't seen it, you will today. We'll be going through the markets using Bookmap to really show how the order flow can really shape price action on a micro level. So next up, you can follow my work at a couple of different places. You probably already know me from Twitter, but you can also check out my YouTube. It has the same name, so that's Mayhem 4 Markets, Mayhem number 4 Markets. My trading ideas, one-on-one coaching, and unique market tools can be found at TraderAid.com. And my long-term trading and investment ideas, research and consulting services for institutions and high net worth individuals are available at Macrovisor.com. And you can get up to 40% off of Bookmap by visiting TraderAid.com/Bookmap. That's TraderAid.com/Bookmap. Just scroll down to the specials. And I stream regularly, including for Bookmap, every Tuesday at 9 a.m. So be sure to join me. And speaking of Bookmap, let's dive right in. So on screen, we've got the S&P 500 futures contract for September of 2024. That is the most actively traded contract. So that's the one we focus on. You've got to make sure you understand when you're trading futures that you roll these contracts, right? It's part of managing your positioning in these. So we've rolled over from June to September, not terribly long ago. What's interesting is we do see these bands of liquidity above and below the contract, which is typically something you only really see around roll time. But really for the last week and 2 days, that's been a phenomenon in the S&P futures. So what do we see on screen here? Well, I mentioned that liquidity. This is a heat map, right? So the closer to those reds and oranges and yellows, the more liquidity, and the cooler color, the blues and the dark black color, that is really the absence thereof. And that heat map tends to show more of that liquidity closer to price, just to emphasize its importance. So, you know, these bands of liquidity, that's interesting, but I'm not putting a whole lot of stock in that. What I'm more interested in seeing is where liquidity may be resting, where we may see, you know, large offers and bids. For example, you know, here's an outlier offer over here at 58.50 on ES. There's 409 contracts up there. It's a little far from price for me to be too mindful of it, but nevertheless, that's the sort of thing during the trading day we look for. And I have my Bookmap set up so that specifically it will show prices where there are levels of offers or bids at 250 or more. So that is the that is one of the plugins you can actually add right into your own Bookmap that I find to be quite helpful. And it's the liquidity marker, right? I believe it's free for most of the plans, but basically I use the marker mode with max liquidity levels. I have marking liquidity of more than 249, so that's 250 and up, and I increase it from 3 to 5 levels, right? So that way it'll automatically generate these labels. That helps me because I want to spend as little time interpreting the chart as possible. I really like to, you know, take a glance, get a sense as to whether anything important is happening on screen, and then go on with my trading. So knowing where those larger resting liquidity levels are that can act either as magnets or even potential levels of resistance is important to me just as much. It's important to see how price reacts at those levels, right? So if you have a really large level of resting liquidity and price runs right up to it, but doesn't fill that order and starts to retreat, that can be a reversal that's actionable on a scalping time frame, just as one example. So let's go through the rest of what I have on my screen, because the trading day is going to start in just about 22 minutes. And I want to take you through the first half hour of trading using Bookmap, showing you how I visualize that. It's a very interesting time to watch trading as well, because really the first and last hour of the day is where most of the transactional activity occurs. So you can see there's a red line on top, there's a green line on bottom. This is the high price level, the highest price that we've seen in the session, the lowest price that we've seen in the session. These are going to reset at 9:30, so they can very easily and dynamically define the opening range for me. And that helps me quite a bit, because, you know, having that visualization right on screen allows you to have a sense as to really, you know, what's happening in that particular scenario. So, you know, if I have a 20-minute opening range breakout to the upside, I'm going to see that highest price level move higher, and I'm also going to get an opportunity to see whether price builds some acceptance up there, whether we're forming an uptrend day. The other thing that helps me is seeing that visualization gives me a sense as to what kind of volatility I might expect. For example, like yesterday, if the opening range is only 8.5 handles, that's not very exciting, is it? It doesn't portend to a very large amount of volatility on a realized basis during the trading day. On the other hand, if you get an opening range of, like, say 20 handles or more, that suggests you could have a pretty fun trading day ahead. So, you know, context is key, and these indicators, these high and low price levels, actually help me quite a bit. So the way I set them up is I go to the price levels tool. You can add that into your add-ons, right? So I have it already added, obviously. I don't use the middle price level because I prefer the point of control, but I have the highest and lowest set up. And then I have a schedule reset up every day. So it resets every day at 9:30 a.m. Eastern. Okay? So that way you get that opening range right off the bat, and then you get to track new highs and new lows throughout the day as well. That's been helpful for me. It's a very simple tool, but it's nice to have all that visualization in one place. The other thing is you can always zoom in and out. Like I was showing you earlier, you know, when you zoom out, you can see all that resting liquidity across various bids and offers, but you can also zoom out in terms of time, right? So if I want to go back farther, I can see what all is happening even from that start of the European trading session. And if you have backfill set up, you can go quite a ways back. I can take 7 days of data if I want to and pull it in here. So the Rhythmic data set, as I was informed yesterday, actually backfills from DXFeed, but it's still quite helpful to have that if you need that context, right? So for me, I can get a sense that, hey, we had a little bit of a bid into the European Open. Then we started to see some selling as we got into the US pre-market session, and now we're seeing just a little bit of a bounce back to a lower high. So that context is important. And then it's easy to manage what's on screen with time slices. So you can figure out how much data do you want to display. I typically do 20 or 30 minutes, right? That just allows me to see what's pretty important for the near-term price action. But I do consistently zoom out in terms of price levels and in terms of time, just as much as I may zoom in, for example, to see the microstructure. So you can also zoom in to quite a high level of granularity on here, which can be quite helpful, especially if you're looking for smaller moves, if you're sort of what I like to call micro scalping. That's not exactly how I trade. When I day trade, I'm not trading that much during the day. I'm very selective about entry, exit, sizing, and I don't want to churn too much. So I might trade, you know, 2, 3, 4 times on a busy day trading day, but that's because I'm also looking for days where there's, say, for example, a clearly defined trend day, and then there's not a whole lot of position management for me to do. I'm going to set a bracket order. I'm going to define my exit, usually based on where there's liquidity and where there's options activity and where there's some information of the volume profile as to where we might peak out. And then I'm going to set my risk level. You know, I'm going to set my stop. And that's pretty much how I'm going to manage that. I'm not going to be watching every single tick once I'm in, because quite frankly, that's a way we can exhaust our mental energy reserves. And it's better, in my opinion, to focus that elsewhere. So I like to set it and forget it with some of these trades. And that also tells you what? Tells you I'm not using an insane amount of size. Because if I was, I'd be too nervous and I'd have to watch every tick, right? So I keep size reasonable. I don't want my losses to get in the way of me being able to trade the next day, next week, next year. Because everyone's going to have losers. Even the best traders may not have a win rate much above 60%, and that's fine. Cut your losers quickly, ride your winners, and you're going to make a decent amount of money, even with that kind of a win rate. So someone asked, liquidity providers slipped on the algo bands because of less willing buyers at these levels. You know, I don't know. That's a great question. I mean, if we could ask them, but I really don't know if that has anything to do with it. What I can observe is that order book depth across both offers and bids has been rather low. And I think that has something to do with the summer doldrums, right? So if you have order book depth around 50K, which it is right now pre-market, that's not that liquid. I really like to see it, you know, close to or around 60K. We have had days where it was well under 50K as well, in the 40s. And those types of days of lower liquidity mean you're more likely to see higher levels of realized volatility, right? You get an event volatility catalyst, you have an outsized reaction because it takes less volume to move price more. So I do contextualize how I'm going to size and how I'm going to trade based on liquidity as well, because it gives me a better idea as to, okay, you know, this day is really volatile based on the lack of order book depth, right? So I'm not going to take as large of a size. I'm going to have a wider stop if that was the case, right? So that would be a day where we're like in the 40s. I'm looking at that. I'm going to have to be much more selective because otherwise I could get hurt. And that's the thing, like trading, yeah, it's fun, It's great to have that adrenaline rush, but you need to manage your risk first, and you need to be very systematic and non-emotional. You can enjoy it. There's nothing wrong with enjoying it. There's everything wrong with letting that enjoyment cloud your judgment. Does that make sense? That's the delineation. And it takes time to get into that mindset. I don't expect newer traders to immediately say, oh yeah, I get it. I'm not going to be emotional about my trading at all. And like it clicks immediately. But over time, it will click. That's part of the success, is that objectivity. So we're about 15 minutes away from the start of the trading day. If anyone out there has any questions, please let me know. We're going to take a look around some of these other markets. Got the NASDAQ getting rebid just a little bit here pre-market. You can see it has a similar look as the S&P. It had that bid at the start of the European session. Got bid up a bit, now rolling over a little, making a lower high like the S&P pre-market. Russell, similar look. Got a tepid bid in the European session, now rolling over, kind of giving back some of those gains from yesterday. I have a feeling some of those gains yesterday were shorts covering in the small caps. I hate to say it, but I don't think we're quite out of the woods with the small caps yet. There's still a lot of companies in the Russell that don't make any money. They're quite sensitive to rates. And if rates have gotten close to a bottom here, which I think they may have, unless we get more surprisingly disappointing economic data and cooler inflation data, that could put pressure on the Russell. The Russell and the 10-year note futures price tend to trade almost hand in hand. Let's take a look at that 10-year note futures price. Just a little bit of pressure today, right? And we can see rates are on the rise on the long end just a little bit this morning as well. Crude oil cracking $82 this morning, was under it just a little while earlier, now popping back higher. I still am bullish of crude overall. I'm going to stay bullish of crude as long as we're above 81.53. That's kind of my key pivot for crude right now. We're pretty close to it today, so we'll see how this resolves. We didn't see barrel have much an effect on price discovery for oil. This is why I don't bet on tails. I mentioned this on social. It's actually a very important thing to think about. I mean, everyone kind of wants to bet on, different types of tail outcomes, but they're tail outcomes because they're outliers. They're standard deviations away from the norm. But when we're traders, we're betting on high probability outcomes, right? That means you don't bet on tails, you hedge for tails. There's some important clarification. So for a weather event, it's not really worth trading for, but like if you were short oil for whatever reason, like you really don't like making money at this time of year, then, we'd hedge for that risk, right? Or if you were long energy companies that might be in the path of the hurricane, maybe you'd hedge that risk otherwise, maybe buying some puts on those names, for example. But I don't like to bet on tails. Another type of tails, so with oil, that's a right tail, that weather risk, right? A right tail means price could go up. A left tail, like betting on a crash, is another type of tail that's not worth betting on because you can't predict it. There's no true consistency or reliability to speculating that way. So it makes a lot more sense to trade based on fundamentals of supply and demand with oil. And that demand has been rather robust. So that's what has me bullish, as well as the technicals. The momentum confirms the macro, and that's where that trade really came from. Let's look at natural gas. Natural gas has rolled over from its highs, but this morning it's looking rather sprightly. So we'll be keeping an eye on that one. We get inventory data this Thursday. Gold has been on an interesting journey. We had that pullback yesterday. Today it seems to be consolidating along with silver. Silver's got a little bit of a decent bid pre-market, up about 0.9%. And then we have everyone's favorite speculative vehicle. And no, I'm not talking about GameStop. I'm talking about Bitcoin. Bitcoin's been on a bit of a perilous journey recently, hasn't it? And it seems like it's trying to form a bottom here, but we'll just have to watch and wait. One thing that's sure about crypto is it will do whatever it wants at all times. So yes, there are some rules to the road. There's technicals, there's momentum, there's psychology. There's no real way to value this stuff, so it can move wildly in either direction. But I like to watch it as a barometer for risk appetite. That's where I think it can be helpful. Ahead of the open, we have a market on open imbalance of about 44 million to the sell side on the S&P. We'll keep an eye on that as we approach the opening bell in just under 10 minutes. Let's circle back to the S&P here, where that bid is growing just a little bit ahead of the open. Now, we do have a pretty busy calendar today. We've got Powell and Yellen at 10 a.m. We've got the 3-year note auction at 1 p.m. Got the Fed's Bowman at 1:30 p.m. And prior, we also had the NFIB Small Business Confidence Index, which continues to show concern from small business owners responding to the survey about inflation, about high prices. We also had Johnson Redbook retail sales, which came in pretty decent, over 6%. And S&P futures implied to open up about 0.2%. That brings us kind of right back to the scene of the crime yesterday. One of my initial price targets going into this week was S&P cash 55.80. There's a large level of options interest there as we came into the week, and we did get just a little bit higher than that yesterday and then retreated. My next area that I'm watching pretty closely is that big even number S&P 5600 on cash. It's a pretty large amount of options interest up there as well. Could act like a bit of a magnet as we approach it, and then a bit of a ceiling as we kind of get caught in it. And the biggest thing to watch is, do we see larger traders rolling their positions higher? Do we see more interest build at, say, 5625, 5650, 5700? So far, not really, but let's see how the trading day and week takes shape. I do like to watch this positioning because over the full chain, rather than just 0 DTE, but the full chain can give us some very valuable clues. And also with S&P options, about 1.2 trillion of notionals trading every day versus the equity index futures, where it's about 450 billion across all of them. So the tail really wags the dog. We have to be mindful of how options can influence price of the underlying. They play a very big role. Market on open imbalance, about 48 million to the sell side. Not much to see here. So let's talk a little bit more about what you see on screen as we get closer to the opening bell. So these bubbles here are the subject of many questions, and I get it. It's a little different than line charts, bar charts, candlestick charts. This is its own unique animal, and I find it to be quite helpful. These bubbles represent deltas, right? So this is the delta between buyers and sellers. A green bubble is a excess of buyers versus sellers, and red is the opposite. The larger the bubble, the bigger the difference. So you can start to see where one side is getting a little bit more aggressive. Like, for example, right here at this green bubble, that you see on the screen just before you see this iceberg and stop, right? This green bubble right here that I've just dragged to the center of the screen, you can see that led to a larger uptrend. That's where buyers started to get a little bit more aggressive there. And from there, they really did take control of that price action for like the next, let's call it 45 minutes or so, right? Maybe 40 minutes. Nevertheless, that's another thing to watch for. Now, I have built some custom indicators that kind of help a little bit more to show exhaustion, to show aggressive absorption. And then I also have that options visualizer that shows some of those flows that can help to move the market. So I have some tools that kind of give me a little extra edge, but they all build into the core platform that is Bookmap. And I did mention icebergs and stops. So on screen, you can see I have my icebergs set up. They're a little different than the defaults because I color code them. So sell side icebergs, red, buy side icebergs, green, right? And I just customized it so that they're only the most extreme order flow. Why do I do that? Because I want my chart to be very simple and really only show what I consider to be unusual or important. So if you look at my settings for icebergs, you'll see I have a 30-minute sample period and a standard deviation multiplier of 10, right? So that means I'm only seeing, I do the same thing with stops, and I also only show stop runs, right? So the reason I'm doing that is because I want only the more pronounced activity to show up on chart, because otherwise, for me, being as ADD as I am, I'll get distracted. And the last thing you want to be when you're trading and really agility and being nimble matter is to be distracted. So you'll see how these kick into gear during the trading session, how important these can be. If you see, for example, a large stop run to the downside, but an institutional buyer coming in and absorbing that with icebergs, that can be really helpful to show there's a reversal underway, right? That the more price sensitive traders are getting booted out, and the larger desks that are passive buyers are sort of hoovering all those contracts up and preparing for a move in the opposite direction. That's one of my favorite plays with icebergs versus stops. And it really is that. It's icebergs versus stops in that particular scenario. You'll also see I have the icebergs and stops plotted on the sub chart. And I also have a customized indicator from the Market Pulse volume pressure indicator. This is my aggression indicator. And the reason I call it aggression is it only really triggers when it's minus 90 or more or plus 90 or more. And that shows where buyers or sellers are getting more aggressive on the tape. And I like to look at these things with convergence. To me, convergences are key. So if I see more than one indicator telling me the same thing, that adds to my confidence of its validity, of the message it's sending. So as we go through the first half hour of trading, I'll talk about these indications as I see them to try to identify some of these potential opportunities or turning points. And of course, we'll be paying very close attention to the 20-minute opening range. That's the opening range that I focus on, that I've back tested. It gives us an opportunity to really see how it plays out for 10 minutes from 9:50 to 10 a.m. as well. And so we'll get a sense going into those major volatility catalysts, you know, Powell and Yellen speaking at the same time, to see where the market trend may be taking shape. But bear in mind, as we get into those event volatility catalysts, anything can happen based on what they say, especially Powell. I don't expect anything terribly unusual from their testimony, but, you know, we have to watch and wait. And I will live stream Powell's testimony as we kind of wrap up the Bookmap stream around 10 a.m. I'm going to switch over to live streaming Powell's testimony with the market reaction, because I think that is probably one thing we should all be keeping an eye on. We'll also get to learn just how much our legislators don't really understand monetary policy or even their role in fiscal policy based on some of the unfortunate questions they repeatedly ask Powell. Market on open imbalance, just less than a minute away. 100 million to the sell side on S&P, 3 million to the sell side on the NASDAQ, 30 million to the sell side on the Dow. So a little bit of implied downside pressure based on the market on open imbalance. Opening bell has rung. We are live trading now. The regular trading hours cash session is underway. And folks, while I'm streaming, if you have any questions about anything I'm talking about, please feel free to ask. Always happy to help. I genuinely enjoy teaching and sharing the knowledge I've amassed over 19 years of trading. I think that no matter where anyone is in their journey, they always have more to learn. And that includes me. I'm always learning. Every day I try to take time to learn new things and hone my skills and improve my focus. So you can see the high and low price bands have narrowed as we have the opening bell that resets at 9:30 a.m. like I was telling you all earlier. And so that gives us immediately a sense of the opening range across all time frames, right? I know some people look at a 30-second opening range, a 2-minute, a 5-minute, 10-minute, 15, 20, 30, hour. You can have all of that with this band. It just gives you a very simple on-screen indicator. I also know that Bookmap offers audio alerts. I find them helpful, but like the indicators on my chart, I only really have them for the larger or more unusual activity. So once again, if one of those types of alerts tends to go off, it means, like you can hear with that, almost sounds like a dove cooing. That's the ES aggression indicator getting to -90 or more, right? So that tells me, hey, you should look at your chart. What's going on? And you could see a larger delta sell bubble appearing on screen at the same time, right? So there is a little more aggression on the sell side. So that's helpful. It's just, having those visual and audio indicators at potential points where they're either turning points or at least areas where you should pay attention, that helps me as well. One of the bits of capital that we have as traders that you don't have a balance that you can track. It's not a level of liquidity. It's your mental capital. And you want to preserve that, just like you want to preserve your actual capital. And preservation of mental capital means optimization of your system. You don't want to have analysis paralysis. You don't want to have too much going on that you can't make good decisions. Big Spark asks, what aspects of Bookmap are best to spot major market reversals and breakouts? So, for me, I would say it really does depend on your time frame. If you're a swing trader, I don't know that you're going to see a major market breakout or reversal as easily, because this is much more near time focused, like intraday focused. But for the day-to-day trades, I really find that watching the opening range and how we may build acceptance above or below it, indicating a breakout or a breakdown, is one of the most statistically consistent ways to identify a trend day. Yeah, so opening range. Opening range is where you're going to find those momentum shifts, and then you can add to that by looking at convergence levels, right? Where is their interest in options activity, for example? And we'll get some of those levels as we see more trading in CBOE. Where is their interest in terms of the order book and resting liquidity? Where are there large offers and bids that may take us to certain milestones based on the trend day, say having a 50% extension, right? So let's say you had a 12 handle opening range. You break out to the upside of that opening range and you expect maybe we'll have a 6 handle extension, and you see that there's resting liquidity above around that level where that 6 handle extension would go. That might give you a little bit more confidence that you could see that play out because there's other larger players looking for a similar outcome. It also matters, are buyers showing some aggression in that scenario? Are we seeing a decent amount of these healthy green delta bubbles kind of showing that buyers are absorbing and continuing to outnumber sellers in the order flow? That can be helpful as well. I like to see Iceberg accumulation. That always gives me a little confidence when the larger players are passively buying in and adding to their exposure. Like yesterday, one of the things we saw before price rolled over a bit was just one Iceberg seller after another, thousands and thousands of lots being sold. And that gave you a sense that a lot of that buying was being absorbed aggressively, right? And then we saw a low form when we had a buyer exhaustion print, or I'm sorry, a seller exhaustion print, right? Big difference. We saw a seller exhaustion print and things kind of turned around the other way. So for me, it's contextual, but at the beginning of the day, I'm really watching the opening range. And then as the day goes on, I'm watching for how that order flow takes shape and where there might be shifts. For example, the other thing that I was mentioning earlier, I'm not sure if you caught it, was that relationship between stops and icebergs. Like, let's say you see an exhaustive sell side stop out. So all of your buyers are getting stopped out with sales, but at the same time, you see aggressive iceberg accumulation. And I'm talking, if we're looking at S&P, in the thousands of each, right? Thousands of contracts stopped out, thousands of icebergs showing passive accumulation at the same time. That can mark a turning point. And if you see price start to turn around and move higher, so you're getting that confirmation and momentum, that can be another opportunity to take advantage of a reversal. It's almost like a change in guard. Weak hands getting shaken out of the market, strong hands accumulating their positions. That can be another area where I get much more interested in looking for reversals. So those are some of the scenarios I look for. Let me know if that's helpful, if you have any follow-on. So we'll zoom in just a little bit here, right on the opening. Not terribly exciting so far today. Got about, 6.25 handles on this opening range so far. We'll see how that evolves over the next 13 minutes. I have a feeling the fireworks, if they are going to happen, will be more 10 a.m. and on. A lot of folks probably kind of anticipating that. I think we saw some just-in-time hedging flows yesterday towards the end of the day ahead of these events, added to a bit of the chop. What do I mean by just-in-time hedging, and why would you hedge just in time? This is another area I find very interesting. So because zero DTEs and really just hate selling puts, really a lot of volatility selling on the put side has become a favorite pastime for this market. It means if you're hedging, if you're buying insurance products in the form of puts, you are better served buying them as late as possible, ahead of whatever you're hedging against. Why? Because otherwise you're losing premium as that gets sold down. So just-in-time hedging has been one of the things that's been sort of like a bit of a change in how this market has been behaving. So we can see 8-day at the money S&P vol is actually really, really low. It's like at the post-COVID lows now. When you say the halo effect, are you talking about the band of liquidity above and below ES? So Big Spark asked, can you speak to the halo effect and what it may be? You noticed it's now more prevalent on the ES than normal. Yeah, I mean, this is something we were talking about a bit earlier as well. There's really no clear reason to be able to define as to exactly why that's happening. as it was said in the chat by Santa, you know, nobody but the algo really knows exactly why. What I can say is this is something that you typically see around contract roll time. And we certainly did see it as the June contract was rolling off into September, but we're way past that. So it's very unusual. It's been going on really since last Friday. So it's been about a week and 2 days. We observed it here last week on the stream as well, talking about it. And there's not like a clear indication as to exactly why. All I can say is it's unusual. But if anyone else has any thoughts on it, that's more familiar with those order flows and liquidity providers, how the market makers are really, you know, managing price and wants to weigh in, I'm open to hearing that. I mean, certainly I'm always here to learn, and there may be folks that are more plugged into all that, what's going on in Chicago. But for me, I don't have a clearly defined reason. So what you're seeing there, Yang, is the icebergs and the number of orders in them. So that's 350 contracts in 3 orders that were sold there. And there's still an open order as well. So you can even see that on the subchart. That dip right there was that iceberg sale. And you can also see that when that larger seller came in, price started to retreat. Now, typically 350 is not that much to shake a stick at. But in a lower liquidity environment, where, you know, the auction, this sort of three-way auction that is the market, is searching for directionality and liquidity, that seems to have a more pronounced effect. So about 12 minutes into the trading day, let's take a look around some of these other markets. Get a sense as to what's going on out there. So the NASDAQ here, we're going to just take this time slice and zoom it into 30 minutes. You could see we had this nice pop off the open, pretty significant, and then just dropped right after that, even making a new low off the open on this one. So we'll be watching the NASDAQ. We don't really have anything that pronounced in the S&P. The NASDAQ definitely amplifying some of that realized volatility. So that's something to watch. Got a request for Nat Gas from Atlas. I'll get to that in just a moment here. I'm just going to go through some of these. Russell, we're going to zoom this one in, but it looks yucky. I did say pre-market I expected the Russell's recovery to be perilous and probably see some more selling. But, you know, so far, that seems to be playing out overall. In the open, you had this kind of gappy downward move, recovering a little bit. Sellers absorbing buyers here. That big block there is a very aggressive absorption print. So you could see those sellers coming in a little bit more aggressively. But overall, the Russell not having a fantastic day. Of all the major indices, it's struggling the most, right? The Dow and the Russell are down. S&P and NASDAQ are up marginally. And that seems to be one of the stories we're following. Because, you know, the S&P and the NASDAQ largely get bid up based on larger tech. Here's the 10-year note futures. We're going to zoom in on this a little bit because, you know, otherwise we're not going to get much out of it. Not much movement here. This is one to watch, however, during the testimony. How do rates move? How do they react to the Fed? How do they react to the Treasury, right? To Yellen speaking at the same time. So I've got some questions coming in. Don't worry, I'll get to all of them. Just bear with me here as I go through this overview. Crude retreating. Just having a bit of a choppy session overall in crude. Remember, some folks were hedging for that storm. Those hedges are being removed as it didn't do a lot of damage to refining and productive capacity. So that's important. But I'm still bullish on crude as long as we're above 81.53. That's my key pivot. I still believe demand is strong. Here's natural gas. This was requested by Atlas. We're going to take a look at this over just a 30-minute time stretch first. We can see it is rolling over to new lows. Now let's zoom out. We can see we had this big run, right, from just before 8 a.m. pre-market, and now we're starting to roll over. I favor further fading natural gas lower from here. We had this big iceberg buy, didn't matter, right? And we can see sellers continuing to push this lower. We see some more aggressive selling bubbles coming in. That's a Delta prints, especially some of these, as the selling was accelerated, just showing you right now sellers have control of the price action in natural gas. While there has been some institutional absorption with Icebergs, we continue to make new lows. Gold, on the other hand, starting to look a little bit more sprightly here. Again, we'll zoom in. I was looking at some of the action from the European session into the US session. We did see some buyer exhaustion earlier that caused a brief retreat, and now we're starting to regroup, pushed higher, and then retreated again. But this looks like we may be making a higher low here. So let's watch those precious metals, particularly their reaction to the testimony. Bitcoin retreating a little bit here. This one has been really volatile. So we've been looking at this as a potential kind of breakdown and that consolidation range, suggesting there could be more downside. But we do see buyers starting to get more aggressive here. That's a pretty large buy-side delta bubble there that just printed on Bitcoin. So let's go back to ES for a second here, because I was asked, where is the aggression indicator that you have on the bottom right? So I talked about that a little bit earlier. So this is the market pulse indicator, and I'll show you how I have it configured so you can set it up the same way on your end. Right? So this is the market pulse indicator. I've renamed it ES aggression because to me, that's what it's doing. I'm using the volume pressure imbalance algorithm with a threshold of 90. And that's because at 90 and above, that's showing me aggression by either party. I also have it plotted out on the subchart, right? And I have the volume at 20, so it makes some sound effects when it gets to those thresholds. And and on the subchart, I have it set up as well to just basically create those lines. It's the light green and the dark, right? So this is that indicator right here. So I have basically 4 lines that I'm drawing on the subchart. It's ES aggression, it's stops, it's icebergs, and it's a cumulative volume delta. I don't draw liquidity differential on the subchart, but I do have it on that radial display. And I do like the market pulse indicators. I do feel like they're quite helpful for scalpers, but for me, I'm also looking at them as confirmation of potential turning points, right? As I was mentioning earlier, I like convergence. This is one of those indicators I put into that group of convergence indicators. So let's look at some of the majors here. We've got Apple off the open. Bit of a sell. Pretty aggressive red delta there. Buyers tried to absorb that pressure, didn't really succeed. So we can see Apple having a pretty sloppy open, trying to recover those losses now. Climbing back towards the point of control. This one's been unstoppable, and it's a stock where the fundamentals do not justify the price action whatsoever. But nevertheless, you can't really argue with price action. So this would be one of those where if it did have a shift of momentum lower, it would be an interesting fade. But for now, we've got to watch the price action. The price action continues to favor more upside in the near term. Amazon not having such a great open. Got this big pop now rolling off those gains. Buyers did absorb that selling pressure, this time more successfully than what we saw in Apple. But that's not really leading to any sustained gains. We can see Amazon getting close to making new cash session lows here. Google, a similar look as Amazon, popped right off the open, almost as if there was some anticipation of continuation. And instead of that, now we're making new lows in Google. So starting to look a little bit more precarious in some of these tech heavyweights. Meta, somewhat similar look here, not quite making new lows, but certainly had that huge pop off the open, and that was sold into somewhat aggressively. Microsoft, oof, no pop at the open, just selling, 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 and more selling to new lows. And everyone's favorite stock, the stock of stocks, Nvidia, not mimicking that look at all, really the opposite, popping off the open, consolidating, and then making a new high. So Nvidia continues to look pretty good, as does Tesla here. Tesla popping off the open, consolidating, making a new high, consolidating. So, you know, we do have some exceptions to the rule, but some of the majors are rolling over, and that is a bit of a concern for the tech-laden index here. You can see it looks like the NASDAQ trying to put in a little bit of a bottom of the point of control here, testing it and now breaking above VWAP. Yeah, Nvidia is pretty crazy. And folks, we've got about 8 minutes left until I need to wrap up this stream. I will continue on my YouTube, on Twitter, and on Twitch. I'll stream Powell's testimony because I think, and the market reaction show. I'll show Bookmap, and I'll put Powell in the corner here in the penalty box, and we'll see the real-time price action there. Let's take a look at some of the options activity as well in my options visualizer. So we can see there is interest in calls quite a bit above price here, you know, about 14 handles above price. That's the most active strike on the entire chain. And then the second most active strikes are really, the second most active call, I guess I could say, is about 56.72. And then we have a reasonably active put strike below us here around 56.17. And the most active put strike just around 56.12. All right, so we do see a pretty wide range of opinions as to where price can go. Now, as the trading day evolves, these positions will shift around a little bit. But essentially what this is giving you a sense of is folks are positioning for increased volatility, probably as we get through these event volatility catalysts, the Powell and Yellen testimony. And there is some hedging for downside here happening even intraday. You can see that the expectations of downside are more pronounced than the expectations of where we could go to the upside. So that does look like some hedging flows that are starting to come in. That just-in-time hedging. And folks, if you enjoy what you're seeing here on Bookmap, I've been using Bookmap for over 2 years. I have it on every day that the market is open. You get up to 40% off visiting traderay.com/bookmap. Just scroll down to the specials and take advantage of these deals while they're available. There's also a great community on the Bookmap Discord that can help you kind of learn the ropes. And every Tuesday I'm here at 9 a.m. doing these live streams showing how I use Bookmap. And of course, I do one-on-one coaching. I've helped a lot of people optimize how they utilize Bookmap in their trading process and just really their entire approach to trading as well. There's a lot of psychology involved with trading, which is another area I love to focus on because it's fascinating. Being in the market for 19 years, you learn a lot about yourself. You learn a lot about other people in the market. You learn a lot about what moves the market. And psychology is a big part of that. Yeah, a lot of these larger companies are trading more like penny stocks now. Someone, Atlas, commented, Nvidia trades like a penny stock. It's true. You know, this is not exactly what you want to see. It doesn't give us a whole heck of a lot of confidence. That level of volatility is interesting, and it brings me back to a statistic. I think it was from Goldman, where the average S&P stock trades at 4.5 times realized vol as the index. It's pretty incredible. So we've got that, that 20-minute opening range. As I mentioned earlier, wasn't looking too inspiring. Nothing has really changed since then. So this is a very, very small opening range, just over 6 handles. So that really suggests that from a statistical probability perspective, probably not going to be a super volatile trading day unless we have some exogenous catalysts, right? So just from an opening range perspective, with that data point in a vacuum, that suggests probably not a ton of volatility. And certainly we don't have anything resembling a trend day of yet. We do see liquidity thinning out as well as we approach Powell and Yellen's testimony. And we are seeing some buying pressure coming in here. You can hear it. We can see it on the screen with those larger green delta bubbles. Powell speaking, expected to start in about 3.5 minutes. And again, I'll be wrapping up my stream on Bookmap Discord and YouTube around that time, but I will be shifting over to stream the same thing on Twitter, my YouTube, and Twitch. And I'll have the live stream and the market reaction in Bookmap. And then after he finishes talking, I'll provide some commentary and thoughts. Johnny Utah asks, good morning. Why do the green, red, and red colors on the right panel reverse below the current price and above price is showing sells to the left and buys to the right? So that's a great question. So the CLB is the current order book. Anything above price is an offer. Anything below price is a bid, right? So that explains that sort of at price, why that's a line in the sand. Because if you're above price, you're offering to sell contracts. If you're below price, you're offering to buy contracts. To the right of that is the session volume profile. So this is where transactional activity has happened, right? So you've seen selling predominantly below, let's call it 56.38, and buying predominantly above that level. So that's where there's been transactions, and this is where there's interest in transacting. So, the current order book is that interest. The session volume profile is where it's already happened. Does that help? And folks out there, I want to thank you for tuning in. I'll be back next Tuesday on the Bookmap stream at 9 a.m. Eastern. Join me there. And stay tuned. Join me on my YouTube, on Twitter, on Twitch, whatever your favorite streaming platform is, for the Powell testimony and the market reaction live. And I'll provide some color and analysis of it after he wraps up, and maybe even occasional quips as he's speaking. These are always fun because we get to learn how our legislators don't really understand monetary policy or their roles as the arbiters of fiscal policy. And for folks out there interested in learning more about what we do at TraderAid, you can get 20% off for a limited time using the code Mayhem20 at checkout at TraderAid.com. That's Mayhem20. You'll get access to the book maps, some of the tools we have during our educational streams, like the options visualizer, absorption, and exhaustion on our Discord live streams, where we provide both educational commentary and analysis of the markets during the trading day. So folks, I want to wrap up here. I want to thank everyone for tuning in. Remember to stay tuned on my YouTube, Twitter, and Twitch for Powell's testimony and the market reaction. We're going to wrap up Back to the Futures with Bookmap here. Really appreciate everyone tuning in and the whole Bookmap team for having me on as a guest, as an educator, to help you all learn more about how to use this awesome software. If you'd like to pick up a copy yourself, visit TraderAid.com/bookmap. Scroll down to the specials to get up to 40% off. And I'll catch you all next week, Tuesday, 9 a.m. See you there.